Welcome everybody to this week's bi-weekly community call. We hold these calls every other Tuesday at 8 a.m. Eastern and 1 p.m. UTC, and our next call will be in 2 weeks. Don't forget to join us on the call. Today we have a packed agenda with Ricky joining us from the foundation team. Ricky is working in BD and he will give us some perspectives from the staking summit which just happened in Istanbul, and our team was there as well. And then we'll hear from Brave. He will update us about the upcoming NMPIP 209, a very important vote that will take place to launch the new tokenomics. And then he'll also touch upon his recent appearing at a Twitter Spaces with the DeFi Edge team. And then, as always, we'll hear from Hugh, and we will go over the last week in review. Don't forget to review the quarterly analysis on the forum. We'll briefly touch upon that as well, and then we'll answer any open questions in the end. Let's get things started with Ricky. Ricky, if you could unmute yourself and go on, that would be great.
Part of our team, Jack, who's also on the BD side of the foundation, myself, and Sam, we were in Istanbul over the weekend at the so-called Staking Summit, which is an annual conference organized by stakingrewards.com that essentially brings together all, or most participants in the Ethereum staking ecosystem. So that's anywhere from staking operators such as Figment and Kiln, or liquid staking protocols such as Lido, Liquid Collective, EtherFi, etc. And it's a really good way to kind of get a pulse on what everybody's working on, the state of the industry, and also kind of where we are going. So kind of want to summarize what I think the three main trends were that I'm a bit biased towards, but the first is basically distributed validator technology, or DVT. There's a number of projects in the space, with the front runner or main innovator being Obol Technologies, that are essentially trying to build smart contracts and other infrastructure which enables staking to basically take place in a very distributed / decentralized way. And as a result of all these decentralized staking nodes, the chances of slashing penalties and other risk events that basically take place right now for more centralized players, the chances of those events happening should get reduced in theory. This is very new. We're getting to a stage where a lot of these projects, namely Obol and SSV, are starting to roll out their first, let's call it, beta version on mainnet. And I think Obol announced that they would launch this in December 1st. Why is this relevant for Nexus? Well, as some of you may know, Nexus offers what we call Ethereum slashing cover, which is mainly, a protection against slashing and other penalties. And DVT could be the technology that leads to much less slashing, etc. So it's very important for us to basically stay on top of, the developments in the DVT space. That being said, DVT itself is essentially a smart contract suite. So we actually had some questions from people at the staking summit on if Nexus would be able to, to cover essentially a protocol cover type product for DVT validators. And that's something that we will explore over the next couple of months as these protocols start to, move into the beta phase and eventually into a full mainnet launch and hopefully get deployed on top of liquid staking protocols such as Lido or Liquid Collective. The second trend and technology that a lot of people were talking about was restaking. The most famous or well-known project in the space is EigenLayer. Just like the TLDR is that restaking essentially allows, holders of liquid staking tokens to essentially stake those tokens again on the restaking layer, essentially increasing the capital efficiency of the system. I personally think that this is something which is moving maybe a little bit too fast, but as some of you know, we actually already provide cover for eigenlayer restaking on Nexus. And then the last trend is that there was a lot of talk and not necessarily demand, but a lot of talk and chatter about cover products or insurance-like products in the Ethereum staking space. And as you know, Nexus is kind of one of the early pioneers here. The reason that people are talking about a lot is that cover and insurance-like products are considered to be kind of like a necessary item to unlock, let's call it the next wave of institutional capital. Because very similar to where the custody space was maybe like 5 years ago, you actually need proper, like for larger institutional funds, so not hedge funds, but you want to call almost like the ETF type players, for them to basically start getting active in the staking space, they would need basically protection against most of the risks that are native to staking. It does feel that we're basically still very well positioned as kind of like one of the first movers in the space. And, as you know, you can see it on the Dune dashboards, like we still have active cover with Liquid Collective, which is now, I think, 3,000 ETH covered, Chorus One, and hopefully in the next couple of months, there are more ETH flashing policies and partnerships that we will be able to announce to you all. So, are there any questions? No? Then I'll hand it over back to Sam.
Thanks, Ricky. It was amazing to have you guys here in Istanbul, and thanks a lot for providing your perspective.
All right. Good morning, everyone. I have the update that everyone has been eagerly waiting for. The tokenomics upgrade proposal will be going on-chain for a no-action vote for all members on the 15th of November. For those of you listening, you know that's less than 24 hours away, and if you're listening to this recording, NMPIP 209 is likely to be open for voting in the Nexus Mutual UI while you're listening to this recording. I'll take some time this morning to review the complete proposal. Since this is a critically important vote, I want to ensure everybody has the information they need to participate in the no action vote. Moving on to the next slide, I'll just review the summary very quickly. Now that the auditing phase has been completed and the auditing reports have come back from both Isoro and Chaos Labs, which you can review in the proposal on the forum, I've included both of those updates in the documentation in the auditing and security section, and that's also in the proposal that is on the forum. But since the auditing phase has been completed, we will be moving on to the on-chain governance vote. The DAO R&D, community, and foundation engineering teams have put up this proposal, which asks members if they want to replace the bonding curve with the ratcheting AMM, and if members want to remove the minimum capital requirement floor, which currently stands at 162,424 ETH. Just for context, in October of 2020, members voted to set the MCR floor at this value, and NMPIP 209, if approved by members, would remove that artificial floor and move to a cover-driven MCR. On the next slide, I'll go over the rationale very quickly. So if you've joined the mutual sometime after December 2020, you may not be familiar with the history behind the MCR lock and the price divergence between NXM and the open market. This led to the current situation where members are not able to redeem NXM for ETH since the MCR ratio, or the amount of capital in ETH terms held on the capital pool over the MCR floor value in ETH, has primarily been below 100% since that time. Anytime where it did rise above that 100% value, there were bots that were arbing the bonding curve, which allowed a couple people to realize some value, but ultimately this led to most members not being able to redeem their NXM for ETH. So because this problem came about, the Nexus Mutual community started discussing ways to solve the MCR lock situation, and it was from these discussions that the Tokenomics Working Group emerged. The DAO R&D team has led this project along with the Foundation engineering team and the wider Nexus Mutual community. And through the community's hard work, the ratcheting AMM was proposed and members signaled their support for this mechanism as a potential replacement for the bonding curve. The goal of the RAM is pretty straightforward. Bring the price of NXM and the open market valuation together again. Allow members who wish to exit to do so directly from the protocol at a reasonable price. Allow the protocol to capture capital when members wish to provide it, and create positive value for long-term aligned members. Going to the next slide, I'll just quickly touch on the parameters. You can find the proposed initial parameters for the RAM in this proposal. For context, the Nexus Mutual community participated in the liquidity parameter discussions, which happened in phases 2 and 3, and members signaled their support for these values. So if approved, the RAM would have an initial budget of 43,835 ETH, which is roughly $90 million worth of ETH. And that will be made available for any members to redeem their NXM for ETH during a 30-day period, which is the initial exit period. After that, the liquidity target will be set at 5,000 ETH, and that will be the amount of liquidity that is provided on an ongoing basis within the RAM. You can see some of these other values like liquidity speed out, which is the amount of ETH that would come out of the RAM if it is above that target ETH liquidity. So if the amount of liquidity allocated in the above pool is over 5,000 ETH, then some liquidity will be removed. And if the liquidity that's in the RAM is less than 5,000 ETH, then 100 ETH per day will move into the RAM as well. But during this initial exit period, the fast liquidity speed, or how quickly liquidity is replenished on a day-to-day basis, is going to be set at 1,500 ETH. And the Oracle buffer is that margin to allow for Oracle lag when calculating book value in ETH. This just makes sure that there's no arbitrage situations that lead to value destruction for members who hold NXM, and that was decided to be set at 1% based on the discussions during the liquidity parameter discussions. So again, the values on this slide were reviewed, discussed, and supported by Nexus Mutual members on the forum and through snapshot signaling votes. For a full list of the initial parameters at launch, you can see the proposal and the RAM white paper. Moving on to the next slide, I'll just talk a little bit about the timeline. So this no action vote will go live on the 15th of November and will be open for voting over a 3-day period. So this vote will be live for 72 hours. Every on-chain proposal is subject to a 24-hour cooldown period before any action can be taken, whether or not the proposal is approved or rejected by members. But if members vote to approve NMPIP 209, the advisory board will execute the upgrade and deploy the contracts after the cooldown period passes. When the vote is put on chain, I will make announcements on the Nexus Mutual Twitter account, in the Discord server, and on Lens. You'll also see a banner in the Nexus Mutual UI and a banner on the main Nexus Mutual website that highlights NMPIP 209 is open for voting. Basically, anywhere we can, we're going to announce this is live to make sure that everyone is aware that this is an ongoing vote and that they can participate in the vote. I do hope everyone takes the time to read this proposal and review it if you haven't already, and participate in this vote when it goes live. This vote is going to be the culmination of over a year of work on behalf of the entire community. If you want to learn more about the RAM, you can review the resources included in the proposal or read through the Nexus Mutual documentation. I've updated the token model section and any other sections where the MCR or token model was discussed in the docs. So briefly, I'll touch on the work completed to date. In January, members signaled their support for the RAM mechanism, and the R&D and engineering teams refined the mechanism before development started in late May. Ray and I put together the educational materials for Phase 1 to prepare everyone for the liquidity parameter discussions in Phase 2, where we received very valuable feedback from the community. We progressed through Phases 2 and 3 as the engineering team developed the RAM selected contracts in tandem with our parameter discussions. Once the smart contract development was completed, the engineering team conducted extensive testing and prepared the contracts for audit. The Foundation commissioned Chaos Labs to conduct the economic audit of the RAM mechanism, and Usoro for the solidity audit. Both audits were conducted and completed in October, and no significant findings were returned. You can review both of those reports in the documentation and in the NMPIP 209 proposal as well. Now that the testing and auditing phase is completed, we're moving to the on-chain governance vote. A big thank you to everybody who has contributed to the tokenomics discussion on Discord and on the forum, as well as the teams who have worked to get this proposal on-chain. I'm looking forward to voting on this NMPIP, and I hope you are too. So a lot of work and a lot of progress has gone into this. So I am just going to summarize the Twitter spaces that we had with DeFi Edge and Open Cover. So on Friday, I joined the DeFi Edge and Open Cover teams to talk about on-chain coverage in Web3. We had a great conversation and covered quite a bit of ground. We talked through the differences between traditional insurance and discretionary cover, as well as the benefits of building a coverage solution on a blockchain, namely the ability to audit Nexus Mutual's capital holdings, claims history, and decisions, staking pool managers' methodology, and fraud prevention mechanisms, among other things. Now that V2 is live, the protocol acts as an infrastructure layer that others can build on top of and create an on-chain risk marketplace. Since pricing isn't set by any one person or team, but by each staking pool manager that sets their own pricing, determines how much capacity they're willing to underwrite and what products they are interested in opening up capacity for. So I talked a little bit about V2, about the features included, and I highlighted the progress that we've seen in our ecosystem and the growth that we've achieved. Now that Nexus Mutual has crypto-native risk experts like Sherlock and Uno rebuilding on top, and new distributors helping to expand cover on L2s like Open Cover, innovative staking pools like Unity Cover, which is launching new products such as the Retail Mutual Cover, our first foray into underwriting risk in traditional markets, and ETH slashing cover, which is, as far as I'm aware, the largest offering of slashing protection available on chain. And of course, Unity Cover has other products in the development pipeline as well. And existing staking pool managers like Ease, who have been actively participating in risk assessment since 2021, we've seen a significant amount of growth since V2 was launched in March. So I shared a lot of those exciting updates. And then during the event, I even talked about underwriting models that are different from Nexus Mutual's underwriting model that haven't been able to scale as well in DeFi, like parametric insurance, and the biggest risks facing DeFi users, which coincidentally we offer the most comprehensive protections for. So like I said, we covered quite a lot in just 45 minutes. I highly recommend listening to the recording, which you can find in the chat for today's call and in the thread for today's call as well. There's also a highlight summary of that call too. I'm hoping to participate in and host more Twitter Spaces events, so keep an eye out for some of those announcements. That wraps up my portion of the call. I will pass things off to Hugh, who will give his weekly update from the Foundation team. Hugh?
Thanks, Brave, Sam. Yeah, so just a couple of quick notes on tokenomics. Really happy with how things are going and so far, especially over the last couple of weeks. Was particularly happy with both the results of the audits, the Chaos Labs economic audit. We got some really positive comments from them, just in general, and like the way we've approached it, the testing and stuff we've done so far, and they said like this is one of the best pieces of work they kind of worked with. So we're really happy with that type of stuff. Also the Solidity audit seems to have gone really well. There was one issue we picked up, which has been fixed. But apart from that, there's nothing major there, just a few informational pieces. So that came back pretty clean as well. So we're really happy with where that's at the moment. And so obviously ready to kind of take the next steps towards implementation. Obviously you have to have the governance vote first. So yeah, like it's all kind of coming to a head, and it's a lot of work from a lot of people. So glad to see it progress. So yeah, that's I guess that's the main stuff on tokenomics. To be honest, that's probably a large chunk of the work from the team at the moment. The other aspects are we're working through all the UI pieces, etc. So there's so just to support the new tokenomics, etc. So that's quite good. There's also a wider UI revamp happening as well in the background. A lot of that's been paused a little at the moment while we ship the rest of the tokenomics, but that's going along as well. So hopefully over the coming months you'll start to see some of that stuff get rolled out. I guess more generally on sales, I guess things are looking a bit more positive, more widely within the crypto market. So, is yield starting to return a bit more with prices going up, etc. Hard to tell. Is it the start of something a bit wider? Again, hard to tell, but we're heading in a more, I guess, a bit more positive direction now. So that's kind of good to know. And I think fundamentally, when it comes down to it, like a lot of the stuff we've been selling, a lot of the covers we've been selling are driven by the fact that we need the yields there to protect. And then if the risk adjusted yield, as in the yield after the cost of cover, needs to be reasonably positive for people to buy cover. So seeing a few more spots where that's happening. So that's quite interesting as well. I guess more broadly, we've been working on, I've mentioned before, we've been working on a relatively large deal. I'm hoping to finalize a draft proposal to go on the forum. Hopefully over the coming week and a half, we'll see if we get there. So there's hopefully something decent in the pipeline there that I'd like the members' views on, because it's quite an interesting one and could be quite a different like foundational for the mutual to kind of take it to the next step. So I think there's some decent stuff happening that we're working on in the background on that side, on the sales side. We're also looking at different ways to expand distribution as well, and so I'm talking to lots of different potential partners there as well. So I think there's a lot of stuff bubbling along in the background, but our number one focus right now is get Tokenomics shipped and implemented, and then looking forward to kind of growing from there, and I guess also using our engineering resources and developer resources to help out more on UI, I guess the UX type stuff. I think one thing we had a catch up in, we got an all team meeting about a month or so back now, but one of the big points we came out with was the fact that we need to be able to people need to be able to more easily interact with the platform, and we kind of broadly describe that as like Web 2 to Web 3 bridge, and how can we make it as easy as possible for Web 2 based people are used to interacting with Web 2 stuff, interact with Nexus in a simple way, and so working on that kind of infrastructure to make that happen, to make it easy, or implementing stuff that other people have done is probably more likely. Then we're going to be looking at that a bit more, but we have to ship Tokenomics first. So that's kind of the stuff we're looking at and what we're focused on. Hopefully I'll be able to share this bigger update on the potential partnership relatively soon. That would be exciting, but hopefully you'll see that over the coming weeks. Happy to take questions.
If there are no questions, I will go on with the weekly analysis portion of the call. Last week, we sold about $11.5 million worth of cover, and our members earned more than $45,000 in fees. This is partly thanks to the partnership, the ongoing partnership with Liquid Collective. And if you want to learn more, you can check out the weekly analysis on the forum, and the link is included in the resource section on the DAO forum thread. Looking at active cover, it has seen about 26% of an increase compared to the last week, and we are now at about $45 million. If you want to learn more about the types of partnerships that are continuing to expand our active cover amount, make sure to take a look at the quarterly insights report. It is included in the resources section of this calls thread on Discord, and also will include a link on YouTube for our viewers to see. What we have tried to essentially include in there is insights from Q3, as much as possible backed by numbers that are coming from the Nexus Mutual Dune dashboards and Etherscan. Both are transparent and available for our members to verify and check out by themselves. We looked at the different types of earnings, DAO commissions, cover sales, cover fees earned, and also we looked at how Nexus Mutual continued to pay claims over the last quarter with a wider outlook on the past year. We hope to continue these quarterly analysis. I think the next one should be out in January, and our intention is to basically notify our members of the interesting strategic directions the mutual is taking. There's a lot happening on the foreground, a lot happening on the background, and we want to make sure that our members know of all the things that we're up to at the mutual. With that, I want to wrap up our presentations for this call and open the space up for any members' questions. Please let us know if you want us to deep dive on anything. If not, let's wrap up this call. Thanks for joining us. We hold these calls every other Tuesday at 8 a.m. Eastern and 1 p.m. UTC. Our next call will be on the 28th of November, and we'll let you know in time for the vote as well as the next big things happening. Thanks again. Have a great week. Bye.
Have a great week. Bye, everybody.
Thanks, everyone.